The market is holding its breath. Sentiment is in the gutter. The VIX is at 20 and the S&P 500 is staring over the edge of a technical cliff. Is this the breakdown we've been waiting for or the bottom of the dip? This is not the week to sit on your hands. This is the week the market chooses direction. And for us, this is the week we get paid. In the next 5 minutes, I'm breaking down the massive catalyst that will define the market and will give you exact high conviction plays, calls, and put trades that I'm watching. Let's get into it. Alright, this week's game plan is simple. Forget the noise. 2 things will move our market, and we're going to trade them. First, the Fed on Wednesday at 2 p.m. Eastern, we get the FOMC meeting minutes. The market is desperate for one thing, clarity on a December rate cut. If these minutes sound hawkish, if they pour cold water on that cut, look out below. If they sound dovish, that's the green light for a rocket ship. This is our first major volatility event. And this is the big one, the AI referendum. On Wednesday also, after the market closes, we got the king himself. NVDA reports earnings. The bar is impossibly high. Astronomically high. A beat isn't enough. A crush might not be enough. They need to promise the moon. This report isn't just about one stock. It's about the entire high growth tech valuation. A miss here could pop the whole bubble. A massive beat could start the next leg up. Second, is the consumer dead? This is a 2-part story. On Tuesday, we got Home Depot earnings. If that number is a disaster, it validates the entire housing weakness narrative. And then again on Thursday, we got the real story. Earnings from Walmart and Ross. If those numbers are also a disaster, now we got a confirmed recession narrative. Listen to me. We do not care about last quarter's numbers. We care about one thing, forward-looking guidance. If they say the holiday season looks weak, the entire market will reprice. If you're finding this breakdown valuable, do me a favor, smash that like button. It tells YouTube we're serious about trading. So, how do we trade this? We want a defined risk and an explosive move. Here are my plays. Trade idea number 1, the breakdown. SPY puts. This is a pure technical and sentiment play. Look at the data. Sentiment is cautious to fearful. The American Association survey is flashing extreme bearishness, and we got extreme fear on the CNN Fear and Greed Index. The SPY is sitting on its last line of defense, the 672-670 zone, for support, but the real line in the sand is the October low of 653. If Tuesday's retail sales are a disaster or Wednesday's FOMC minutes are hawkish, I expect sellers to panic and dump us through that 661 level. The trade, I'm buying the SPY weekly puts expiring this Friday, November 21st. I'm looking at the 665 strike put. This is a deep play. It's an out of the money play, defined risk bet that if 661 breaks, we get a cascade of selling and might get through 653. These puts could explode in value. My max risk is the premium I pay, period. This is a high risk, high reward bet on a specific technical breakdown. This week, if the S&P 500 rallies and closes above 680, this trade is dead. Trade idea number 2, the AI King, NVIDIA calls. This is the binary event of the week. You're not trading the chart, you're trading the catalyst. The bar is high, which is exactly why the reward is so high if they clear it. If NVIDIA delivers blowout data center growth and raises guidance again, it will prove the AI narrative is real. And it could trigger a massive short squeeze and relief rally across the entire Nasdaq. My trade, I'm buying the NVIDIA weekly calls expiring also Friday, November 21st. I'm looking at the money strike right before the announcement on Wednesday. This gives me maximum delta, the most bang for my buck. I want maximum exposure to that initial post earnings pop. Critical warning though, implied volatility on this is insane. I must be right on direction and the move must be bigger than the market expects. If they beat but the stock doesn't move, IV Crush will destroy this option. This is a high stakes, defined risk bet. I'm also willing to lose the entire premium I pay. Trade idea number 3 is the consumer collapse. Home Depot puts. This is a beautiful macro trade. The Fed has held rates high by killing the housing market. On Tuesday, Home Depot reports. On Wednesday, we get US housing stats. This is a perfect 1-2 punch. I expect Home Depot's guidance to be weak, citing a slowdown. If that is confirmed the next day by terrible housing data, this stock has a clear path lower. The trade, I'm not playing the weeklies here. I don't want to get IV crushed. I'm playing the trend that earnings will confirm. I'm buying the Home Depot puts expiring in December. This gives me 3 to 4 weeks for the new bearish narrative to sink in. I'm looking at the money strike. Maximum risk is also premium paid. This gives the trade time to breathe. If HD shocks the world with amazing guidance, the thesis is broken, I exit or let it expire worthless. Which of these trades are you watching? Are you playing the SPY breakdown or the NVIDIA moonshot? Let me know in the comments below. One last thing. Traders, look at this sentiment. Everyone is scared. The VIX is high. The American Association survey is full of bears. Remember, the market climbs a wall of worry, but it also falls off a cliff of panic. We are at that inflection point. The spring is coiled. A dovish surprise could send us ripping higher. A hawkish one could start the cascade. Our job is not to guess. Our job is to have a plan. These calls and puts are our defined risk tools to act on high conviction moves. That's the plan. Watch the Fed, watch the consumer, and watch NVIDIA. We're ready for both sides. If you want actionable trades like this every single week, do yourself a favor, subscribe to this channel, and most importantly, hit that notification bell so you never miss an update. Good luck this week. Trade smart, manage your risk, and let's do it.